Welcome to Financial Investing Radio, where you'll learn the secrets for consistent, high-probability returns in the financial markets for additional income to change your life. Grant applies consistent, high-probability trading systems for the financial markets. He's only recently started sharing these tried and true market secrets. As a gift to listeners, Grant is offering his roadmap to high-probability financial control. Go to financialinvestingradio.com and download yours today. Now, here's your host and trading veteran, Grant Larson.
Hey everybody, this is Grant Larson and welcome to Financial Investing Radio. It is shocking to me that I have yet another opportunity to be with Mr. Zach Morrow, aka former Presidential Security Force expert and now super fantastic, successful real estate guru. He's given me a chance to circle back around and drill him with some more questions. First of all, Zach, welcome back.
Good morning. Good morning, Grant. I am glad to be here. Appreciate you having me.
It's so good to have you here. You know, I really appreciated the last time we spoke. You talked a lot about the journey that you had gone through, right? Your origin story, how you tried lots of different things. Some things didn't work, some things did work, and just kept working with the resources and the assets that you had. You eventually found a mentor through some of the work that you were doing. It almost sort of went tangential to where you're going. I mean, I think you're doing a fitness program, right? Or a company at the time, right?
Correct, yes.
Yeah, okay. And so that ended up taking you from that over into this world of real estate. And you've got this amazing story of how you've just built that up to be this incredibly successful thing. So something that I know I'm very interested to hear about is, all right, what is the solution? What is it that you've come up with that has produced these wonderful results? Can you talk a little bit about Boron Capital's investment solution?
Yeah, absolutely. Well, that is the question, right? We talked about all these problems, and now we got to figure out what the solution is. And so at Boron Capital, we focus on commercial real estate. And so the big picture thinking, Grant, is that in investments, there's two questions that you have to ask before you enter into anything. And there's two things that you have to evaluate. And this is from our side and the investor side as we're acquiring or as, an investor is moving into an investment. And those two things I call protection and production.
Okay. Like, was this inspired from your self-protection thing, protecting the president? Is that where that comes from?
Well, hey, if we can move in that direction if you like, but no, it's because the reality is there's so many opportunities and we'll say, or let's just say options rather, in the market. And there's so many things that we could get into. But if those investments don't offer quality protection and strong production, then it's probably not where you want to get started.
Gosh, I couldn't agree more. That the need to protect is job one. I like the order that you put that in. The protection's first. The production comes later. I mean, obviously, we always want to produce, no doubt about that. But if the protection isn't there, how do you sleep at night anyway, right?
Right. And so what we firmly believe in is you should be invested into vehicles that offer quality protection. And so what do I mean by protection? I mean, we have our standard things, we hear about it all the time of diversification, and, making sure don't put all your eggs in one basket and things like that. And so, while I do agree that diversification is important, I see it a little bit differently than a lot of people might look at it. And, I think Warren Buffett specifically says that diversification isn't, and this isn't, don't quote me here, this is obviously a paraphrase, but the way you look at diversification is that you should be invested into a handful, maybe 5 to 7 different things that work well. It's not about just spreading it all across the board and hoping that you have enough performers and enough losers that it balances out. And so when we're looking at diversification, we're not diversifying against many different markets, we're diversifying against tangible assets. So multiple assets, because we know all these assets produce. And so we operate this way inside of our fund. And I'd like to speak more about how we work there.
Yeah, that's interesting. So it's like you said, the diversification is an important strategy, but does that mean that, let's say that I'm putting money into your fund to do this investing, do I get involved with that selection process? Do I have to know all about, what's the right places to go? You guys are you guys managing all that?
Yeah, so great question. And so to answer that, when you invest with us, we handle everything turnkey for you, because the way we see it is, in any business, the way you move best is aligning with other experts. So our job is to know all the right decisions to make inside our industry. We're the experts here. And so we handle everything turnkey. You know exactly what you're investing into, but obviously you're coming into that specific fund that handles these specific properties and businesses, and then you know what you're going to get on the back end. And so I'd like to give you a kind of a big picture overview. The reason why tangible assets is so important, because it's backing for your capital. So there's actual tangible inherent value. So whenever you're actually purchasing something that has value, right? So if you look at a piece of stock, you're getting a piece of that business, but the business or that piece of paper is not carrying any inherent value. It's just tied directly to the market value of that said company. And so however that company produces, or however the emotions of the market look or view that company, the values can go up and down. There's no protection on the downside. So when you're invested into real estate, and we can go back and forth, I hear it all the time about, well, what happened in, 06, 07, 08, and that's a whole nother story. And we can definitely dive into that as much as you want to, because there's a lot of misconceptions of what actually went on there. But the concept is tangible assets with inherent value to help protect your money. And then in turn, you also want to own the production side of those assets as well.
Okay, so it's if I hear you right, the challenge with the paper assets like the stock is that you're doing it based on the perceived value that others have on a company, and that's largely outside yourself. That's your argument, right?
Right, and that's my point, right? You really have no control over that. So you know as well as I do that a business can be performing well, but when a market shift as a whole, the values are going to drop regardless of the specific performance of that company. Now, there's obviously some differences there, and there's some ways to hedge and things like that. But in real estate or intangible assets, you have inherent value that will help protect any bottoming out. And then specifically in our fund, we actually offer our investors a collateralized position inside that. So they're tied to those assets. So they have an actual collateral, a legal position, what's called a UCC1 lien against all of the assets and their cash flow. So it's a very strong protection.
Yeah. So a question for you on that. Do you think that perceived value plays a role in real estate investments at all?
So it's going to be a little bit different. Perceived value it's not quite the same, because values are based off of what people are paying and what people can pay.
Right.
And so the thing, and we have to differentiate between residential and commercial. Mm-hmm. So with our investments specifically, we not only own the property, but we own the businesses that operate on site.
Oh, really?
So we own both ends of the spectrum. Correct. Yeah. So we own the tangible property and the businesses. So we own the protection and the production.
Do you own
so that's one thing.
I'm sorry. Do you own the property management companies that are running the properties as well then?
Correct. So we have managers inside our executive team. We do on-site managers, and then we'll have regional property management that handles. And so it's layered there.
So let me run a scenario by you. I find that interesting, Zach. Is it that in this commercial space, I've got this set of this set of buildings or units. You own those units, and then some businesses come in there. Let's say one's a Starbucks. Would it mean that you would own, excuse me, that particular Starbucks franchise, or how does that work?
Yeah, so to be specific, we don't own strip centers. We actually operate in what we find to be the strongest niches of real estate. So two of those, and I'll kind of give you guys some insider secrets here. So insider secrets coming up, alert. We work and operate primarily in a couple niches of real estate that provide the highest margins. And so typically, businesses, a normal business might see, anywhere from 5 to 15% margins. I think a huge number of businesses are operating, at even or a loss. And so with our businesses, with our niches of real estate, even outside of, the strip centers, the apartments, what we do specifically is we work in areas where we know we can bring the highest profitable margins. And so for any of our real estate familiar people out there, NOI, net operating income, or for any of our business people who understand net income at the end of the year, our profitability margins are sitting, 60 to 70% plus.
That's crazy. Has anyone lost money with you guys taking this approach?
Great question. So we've been doing this for over 12 years and in over 300 plus real estate transactions. No investors ever lost money with us. And so we were in 06, 07, 08. And even during that time in real estate, none of our investors none of our investors lost money during that time. Everyone was making good money. And so whenever people have fear of the market, and I'll tell you, there's bubbles going on right now in different parts of the world, but you have to know what's going on to be able to handle it. And that's why, in the market, there's things going on that you can and cannot control,
right.
But where we find we want to be able to, as an investor and as an investment firm, because one thing that's important to denote here is that we as a company, we as people are in every single investment that our investors are in. We're not brokers. So we don't broker you into somebody else's deal. We have skin in the game with you.
Well, it's because, and so is that because you end up with your own investment, meaning you're buying it, you're not only using or working with the investor's money, but you yourself, you're invested in terms of the property management and in terms of the businesses that are in there. So you end up owning a piece top to bottom through the whole stack. Is that right?
That's correct. Yeah. And so we are in those investments with you. And so it's a much different situation now, knowing that rather than being brokered into a deal where, your middleman may or may not have skin in the game with you, we're on the same team with you. We're earning where you're earning.
Yeah, that's pretty unique. That really is. So that's a huge statement to say that 12 years of experience, 300 real estate transactions, and investors never lost money. And you're throwing out some pretty big numbers, Mr. Presidential Protector guy. You're saying like 50 to 70% returns. Did I hear that right?
So that's where things are operating. And so what we do with that, we take these specific niches of real estate, our high margin, long-term stabilized assets. Because one thing that we found is, whether it's in the stock market or it's in real estate or wherever it might be, is that most investments don't produce a lot of realized gain. And they don't offer a lot of immediate and long-term stability. So what you see a lot in real estate is you see people coming into these deals where there's development involved, there's acquisition time involved, there's, suppressed cash flow, value adds. And I know I'm throwing out some stuff that, not everybody might be familiar with, but just understand everything I'm saying adds up to suppressed returns and hopefully a better payoff in the long run. Mm-hmm. And so what we wanted to look at here, and that's what everybody's preached at in the market, right? Don't worry about the ups and downs. Over time, it'll balance out. And 30 years from now, when you're going to retire, it'll average out. And what I think, and you can correct me if I'm wrong, but if we're looking at historical market averages in the stock market, it's about 7%, correct?
Right. I mean, yeah, if you do a
Right.
buy and hold strategy, that's right. It's around there.
Yeah, right. Not to say you can't do, and just know we're talking about the people who are planning on using this as an investment vehicle for the long term and not taking it into their own hands. So a lot of people, if you want to get into the game, you can do some different things and the strategies become different and things like that. But in terms of passive investment, that's what we're looking at there.
Mm-hmm.
And so, but where I was going with that is it's a lot of unrealized gain, and it's hope that down the road, long term, when it's my time, then it'll have grown and I'll hopefully have seen this type of return. And so what we said was, let's flip that on its head. You know, even in the real estate game, let's take our best, highest cash flowing assets, our most stable assets. Let's put them into a fund. Let's duplicate and replicate this and allow our investors to come into our already cash flowing stabilized assets so that they can start seeing a return immediately and they can start getting paid consistently. And so what we do in our fund is we take, you know, X amount of properties and we bundle them into this fund. And then from there, we allow investors to come up to a certain portion. So they're diversified against the separate properties. They're also diversified in region. So you're not in the same, you know, region. You're not in the same, not just all tied to one single property. So you have some built-in diversification in multiple ways. You have tangible assets backing your money. You have collateral that helps protect all of your downside, you know, risk. But then these are our highest cash flow and margins. So it has stability in return. And so what we do with these is we actually offer a fixed rate return of 8% to all of our investors here. And so what that looks like is you start receiving return on investment immediately. It pays out 2% every quarter, and the return starts right away. And so the way we look at it, and one of the things that, you know, people see is, number one, we're higher than historical market average. But here's one kicker: is majority of our people who are taking money from the market, because we can take investments one of two ways. We can take it in cash, or we can take, you know, rollovers from retirement accounts. So people will roll over, they stay tax deferred, then they invest their IRAs into our fund. And so what happens is when they go from a managed money position and then come over to us, in that managed money position, they were probably paying, say, 1% to 2% in fees annually. And that's regardless of whether or not they made money.
Right.
Well, with us, we don't charge management fees because we're not brokering you into the deal. So people they're making that fixed 8%, but then they also end up saving 1% to 2% a year on their money. So it really looks more like 9 or 10 to anybody coming over from that market position and that managed money position.
Okay, so you're turning 8, 9, 10% per year on this, and that's as long as you keep, obviously, the money in the funds. Does it ever bump above that? Let's say if there's some liquidation that occurs or something like that, or does it stay at that steady state, you know, 8, 9, 10% year over year?
Yeah, so for this, we built it with the specific purpose of bringing stability and peace of mind to our investors. Mm-hmm. And so it stays at the fixed 8%. And so they just know I'm making 2% a quarter and it's coming out like clockwork.
Yep. Yep. And I love the strategy of, you know, looking at someone's got something in their retirement fund, you know, and they can roll that into the IRA. That seems like a really, I would assume that's a popular strategy for you.
Yeah, absolutely. It's been, especially this year, because I mean, with, you know, a couple high years in the market, you know, people have done really well. And then now we've kind of hit a place of, you know, let's just say uncertainty, right? And so unless you're going to be actively trading in the market and putting a lot of different strategies, kind of the sit and hold right now is we'll just say a little bit more uncertain. I think the U.S. average return this year in 2018 is 0.02 right now.
Yeah, right.
And so we've got a lot of people who are saying, okay, we've rode it well, we're up high, let's pull some of the chips back off the table, you know, while we're ahead and get it in something a little bit more stable.
Right. The liquidity, what's that like? So let's say I take some of my funds, I roll it into your organization. Let's say a year from now, I'm like, oh gosh, I need to go do something else, with this money. What's it like in terms of liquidity and pulling back out of the fund?
Yeah, great question. So whenever somebody moves over with us with this fund specifically, it's a 5-year commitment.
Cool.
And that's for a variety of reasons. But, the truth is, Grant, with our operation, we're in a position to be able to help out anybody that needs to be helped out.
Mm-hmm.
We work very closely with our investors, and we hold very strong relationships. And so in cases of emergency, we're able to make decisions and we're able, to help people out if there's family emergencies, things like that.
Right.
But the agreement is 5 years.
5 years. Gotcha. All right. That's fascinating. So let's say I wanted to learn more. Is there a site that I would go to learn more about this?
Yeah, absolutely. So if you go to www.boroncapital.rei.com/invest now, you'll be able to schedule an introductory call with me directly.
There, hold on. I'm putting this in. www.boroncapitalrei.com/invest now. I'm looking. Okay. All right. I got it here. And hey, there's a video. That must be you, huh? On this video?
That's me.
Nice. Mr. Protector right there. Okay. Man, you protect funds and the president. That's impressive.
That's right. That's right.
So I'm looking down here, and I think Boron Capital provides great returns, protection. I like your production comment. So that's how you started this. You said, we protect number one, and then we provide production, and that production comes with with this sort of sense of almost ease for the investor, right? In other words, that's the part that really appeals to me. When you feel like you've got enough protection, that there's sufficient production where I don't have to be in managing this every day, right? This is something you're taking care of, and
yeah.
It's got this awesome liquidity aspect. It's a 5-year is the deal, which is actually in real estate is actually pretty decent. So that's fascinating to me. What are some of the key things that I would do? Let's say, oh, hey, I want to try this. How do I prepare myself to be able to participate in something like this?
Well, the first step is obviously going to the website and booking an introductory call with me, okay. Because with this fund, obviously, we work so closely with our investors. It is important that we know one another and spend time together. But I want to get a little bit more clarity on your question. Are you just asking specifically, what can somebody do to get involved, or what would the pathway be to become prepared for something like this? Yeah,
what's the pathway to be prepared? I'm assuming you have some entry-level investment thresholds you're looking for, or things like that. What would that look like?
Yeah, so there are specific regulations because we do operate under SEC regulation. And so one of the regulations on this specific fund is that we must work with accredited investors. And so for anybody that's unfamiliar with that, to be deemed an accredited investor by the U.S. regulation, you have to earn over $200,000 a year or more, or jointly as a couple, it could be $300,000. And then the other or would be to have a net worth of $1 million or more. And so you have to be accredited to be a part of this. In terms of, and for those accredited investors that are listening, specifically, our minimum investment is $250,000. But ultimately, what ends up happening whenever I work with somebody new is the question just becomes, what amount would you like earning on the fixed 8%? And so most people are coming in much higher than that because we see that full retirement plan rolling over and coming in and being involved because it becomes somewhere where they can have that peace of mind, know that they're being protected on any downturn, and know that they're actually making better than historical market averages.
Yeah, that's amazing. What if someone's sitting there going, well, I don't quite make it, we're close, or maybe we're not even close, we got a ways to go. Could I join up with other people and sort of build a larger fund together and a bigger net worth base that would then support that? Or has anyone ever done that with you?
So for this fund specifically, I get where you're coming from. For this fund specifically, if that would be, say, like a trust coming in or an LLC investing. So
Exactly.
If we had an LLC, we'd have to look at, once again, the accreditation regulations going down to that LLC, and probably not something we want to look at together. But let's just say if you have a group, and as a group you're wanting to be a part of this, and as a group you can collectively invest over the minimum and would like to, I would just say book a call with me, and then let's get down to the details together, because I'll have specific questions for them. But it is potentially an option. And I will just say that if you have money that you're looking to get working in something similar to this and aren't sure of whether or not you'd be at accreditation or what that is, once again, just book a call with me, and I'll be able to speak directly with you one-on-one to answer all your specific questions.
Okay, fascinating. Okay, so that's interesting. It was www.boroncapitalrei.com/invests-now. And this has got this fixed 8% ROI, which you've got this leverage even in down times, which I think is fascinating. And that comes with very little to no management on my part as the investor, right? It's not like I have to be in checking with you. Obviously, I'm sure I would get updates from you, right?
Yeah. So as an investor, it requires no effort on your end. It's completely passive, 100% turnkey. We manage everything. But as an investor, you also know everything that's happening. You're privy to all the behind the scenes. You're privy to all the prospectuses and the numbers. And what we end up doing is we run quarterly webinars and reports for our investors. And so they're staying in touch. They get to be involved and see what's going on in the company and in their investments. And so, yeah, the only thing you're required to do is, I guess, walk out to the mailbox to pick up your check. And I guess you're not required to do that either. But it's just showing up for the quarterly reports and staying in the loop. But we manage everything for you.
Okay. All right. Excellent. This sounds like a very interesting approach. It's one to stretch and reach out to for a lot of people. I think it's got some value. What questions am I not asking you about the Boron Capital investment solution? What's the name of it? Boron Capital Fixed Rate Fund. Did I get that right?
So this is yep. So the only question, I wasn't sure. Did you book your introductory call with me, Grant? We can get you set up too.
I'm working on it right now. Yeah, that's right. I'm gonna type this in.
Look, I see it coming in.
How do I spell my last name again? Is that with an E or with an O?
Yeah.
Let me check. I think it's fascinating what you've put together here. You've been doing it for 12 years, and then I'm almost in awe with the statement that no investor ever lost money with this. I don't know that just doesn't happen very often. So that's pretty incredible.
Yeah. It's definitely been a blessing. It comes down to knowing exactly your lane and continuing to grow in it and knowing what niches and what things produce. And this just goes back to, for those that missed the conversation last week, one of our philosophies is aligning with other experts to ensure that we stay ahead of the business curve. And so we focus on aligning with other experts such as, Keith Cunningham, Robert Kiyosaki, Grant Cardone, all these other gurus that know their markets and things like that. And, one personal mentor for our CEO has been Tony Robbins. He's the #1 business coach in the world. And our CEO, Mr. Blake Templeton, he traveled the world for, a full year in direct mentorship of Tony. And, it's been a blessing, but it's always about how do we stay ahead of the curve? How do we make sure that we're always growing to continue to deliver the right solutions for our investors? And so making those calculated decisions and making sure that we go in and learn before assuming any unnecessary risk. And so it's all about calculated risk, because we all know that there's no such thing as a guarantee in investments or life. But what we have to do is focus in on how can I mitigate risk and make sure I take the lowest calculated risk in every way to provide the best opportunities. And so that's not only where we spend our time in investments, but it's what we do in our education as well.
So would it be fair to say, to sort of hedge on this statement that no investor has ever lost money with us, would it be fair to say that past results are not indicative of future performance? I mean, it's not like a guaranteed, or is it really intended to be a guaranteed 8%?
So I'll just give you the SEC regulation. I cannot even use the word that we guarantee it.
There you go.
But fixed rate, we just can't do it. So yeah, you're correct in saying, past results don't necessarily dictate future performance. But what I can tell you is that everything we do, we continue to grow in, we continue to become better at, we continue to produce good results. And so what we've created is a fund that gives the lowest calculated risk and the best opportunity for good production as well. And so that's why our numbers are extremely calculated to where we can be confident that it'll come through, but we can't be guaranteed. And I couldn't guarantee you that as well. It's just legally, that's part of the legal structuring. I can't do that. But all I can guarantee is that we're going to continue to produce and learn and grow and put our best foot forward to stay ahead of the game, just like we've always done.
All right, that's awesome. Okay, Zach, just been fascinating. I've enjoyed what you've shared here today. I look forward to learning more about this from you, and hopefully our listeners will have a chance to take a look at this as well. It's one of the strongest guaranteed. No, can't say that, right? Assured.
We can't say that.
It's got a very interesting track record for sure. Hey, everybody, Zach, before we wrap up here, any final comments, thoughts that you have?
I just want to encourage everybody, because just know that whatever your choice is going to be, wherever you're going to be moving forward, remember to start with the end in mind. What am I trying to accomplish? What would it take to get me from where I'm at now to where I'm trying to go? And then what resources do I have available? And what would I need to get there? So just continue to ask the right questions and you'll get the right answers. So quality questions bring quality answers. And so I look forward to, regardless of where you're at, being able to spend more time together, being able to connect and, being able to work together in the future. So I appreciate everybody who listened, and I appreciate you having me on the show, Grant.
Hey, thanks a lot again, Zach, for your time. And thanks, everybody, for listening. And until next time, get some strong protection with strong production.
That's it.
Thank you for joining Grant on Financial Investing Radio. Remember to subscribe and leave feedback. Don't forget to download your free roadmap to high probability financial control before you make an investment decision. Visit financialinvestingradio.com now.